Hello, friends. My name is Deepak, and I am a tax code advisor. We are a nationwide tax firm helping small businesses and individuals file their taxes and obviously providing them with great tax efficient strategies. So, today I want to discuss a very interesting tax case with you because it shows a greedy nature of human being. It shows some silly mistakes that we make, and it actually shows a great tax strategy that some of us might be interested in is applying in our small businesses. So I think it's important to look at this particular case because we all can learn from it. That's the idea. So the case revolves around Section 280A, uh, which is commonly known as Augusta Rule. So that's a very interesting rule. And what in a very simple words, it says that if you have a personal residence, you can rent it for less than 15 days during the year. That will result in no rental income that you have to report on your personal tax return. So let's say if you rent out your home for 14 days and you generated $10,000 in income, it's tax free for you. You don't have to pay any taxes. But the problem happens to many people. They say, well, but I don't want to really rent out my personal residence, to strangers. They're going to be coming in, going into my closet, using my bathroom, using my kitchen, sleeping on my bed. I don't want to do that. Okay. So that's why you don't see too many people taking advantage of this rule. So who is this rule for? Who is taking advantage of it? Who does the strategy work for? So the strategy works very well for small business owners. Okay. Why? So let's assume you have a company. In matter of fact, let me give you a let's just say bigger version because I think it's easier to understand when we look at the bigger picture. Imagine you are a director and you own a nice big mansion in Beverly Hills in California, and you live in that house. That's your personal residence. Maybe you're working with somebody, or maybe you're the one making the movie or whatnot, and you decide to rent that home from yourself. And let's just say the cost of rental is $100,000, and you rent that property for 14 days. You're filming your movie. You have your entire crew coming there. You have lunch for them. You have, this for 14 days is packed, and you collected $100,000. Well, that's $100,000 is tax-free income for you, and you don't pay any tax. And what's even better is for the studio who was making that movie, they get to write off $100,000 as expense. So they're claiming an expense, and you don't have to claim an income. So good for the business, good for you. That means both parties winning. So in one way, if you think about it, it's a $200,000 tax-free income. $100,000 for that company and $100,000 for you. Like, how many of you guys would be happy if you could make $200,000 tax-free? Okay. I'm guessing that somewhere in the US, a tax guy like me was giving a presentation and explaining this Augusta rule, something like this. And somebody in that meeting was sitting, a taxpayer, and he thought, why not? I can do it too. I own a company, and why don't I rent a house that I live in, and I'm going to pay myself, $100,000 or $120,000, and I'm going to write that off. And that's exactly what this couple did. So this couple had a chemicals company, and they rented out their own home, and they rented out for anywhere between, I think some years they rented out for $35,000, some years they rented out for $119,000, and they wrote that off. Okay. And IRS came back and they audited the tax return, and they said, whoa, wait a minute. We don't like that. That makes no sense because we don't find these amounts to be reasonable. They're not fair rental value of the properties. And obviously the taxpayer tried to fight that argument, and they lost because they were not able to justify that, $35,000 or $119,000 was a fair amount. And then obviously they were penalized and they had to pay interest and the whole shebang because of all that chargebacks to their account. So they had to, it was all back taxes. So, so then they have to pay the taxes and they have to pay interest and penalties and whatnot. So you might be saying, Deepak, you just gave us an example of how somebody can write that off. Then why were these people audited? And why did they not win the case? Is this a bad strategy? Is this an illegal strategy? What went wrong here? So the strategy is actually legit. It's a real rule. Like I said, you can go to section 2A and you can go to that section and read it yourself. It's there. It's written. The problem is that example I gave you was about a big blockbuster movie that is being produced, and the property is in Beverly Hills, a big mansion that can probably command that kind of rental income. But if you own an average home, 3, 4, 5 bedroom home, I mean, how much rental income can you expect in one day? $200 a day, 300, if you maybe $500 a day, right? Or let's just say you have probably the best property, maybe $1,000 a day. Okay, even then that's $14,000 if you rent it out for 14 days. How did these people go from 14,000 to $119,000? What were they thinking? The amount was simply not reasonable. So that's the key here. So when you have a small business and you rent something from yourself, you need to figure out what's a reasonable amount. In matter of fact, even after you figure out a reasonable amount, be a little bit cautious. Maybe be a little bit less than that. Don't get too greedy and try uh, to purely use it for tax strategy and show that you're renting yourself at $5,000 a day or something. That's just crazy. That's going to attract attention. That's going to get you in trouble. Don't do that. So what you should do? Well, go on Airbnb, some of the other local sites, and find out how much a similar property got rented out in your area. Not what's on available, but actually somebody paid the amount. Figure that number out. Keep a record of that. That will establish what the real rent in your area is. If you don't know, maybe you can hire somebody to, some professional to come up with that number. Maybe your local realtor or somebody who's specialized in that. Maybe they can help you out. But you need to have some sort of proof as to what a reasonable number is. Especially if you're going on a higher end. Let's say if you have a 5 bedroom house and you put $100 a day rent in your area, maybe that's like reasonable. That I don't think anybody going to question that. But if you want to put $500 a day, then please be cautious. Make sure you can justify that kind of rent. So it's really all about being reasonable. That's the key part here. Number 2, the meeting itself, was that necessary? Was that reasonable? What did you do at the meeting? Did you keep any records? Do you have meeting minutes? Who attended the meeting? What did you guys do at that meeting? For 14 days, what happened? They can question you. I don't think they question that in this case, but IRS can question you. Was that even a reasonable and necessary business expense? Did you have to have it? Okay. Now you can justify it. You can say, look, we were having board meetings for 1 week. We were discussing this, this, this. You got to have an agenda. You need to be able to justify it. Okay. So I think there'll be 2 types of people. Number 1, who will say, look, it's too much hassle. I got to justify it. I'm attracting attention of IRS. Maybe it's not even worth it. Maybe I don't want to deal with that. And some people will say, why not? I'm not doing anything wrong. It's a legit strategy. Why not use it? I'm going to be reasonable. I will have proper records. I will document everything. I have no problem. If IRS comes back and asks me a question, I can answer it. No problem. I don't need to know that. As long as you tell me that it's a legit expense and you're claiming a reasonable amount and you can justify it, I will write it off for you. I have no problem with that. But if IRS does contact you and you're not being reasonable and you cannot provide those records, you will attract some penalties and interest on that, because you would have to pay. They will basically not accept those at the tax-free income. So, or even an expense on the business tax return. So either way, one way or the other, you can possibly get into trouble with that strategy. So please be careful. Don't go out there and just act on some information on TikTok or some YouTube video that you saw and say, "Oh, look, you can make $50,000 in tax-free income." A problem is this: nobody gonna be people will pay a lot of attention if I title the video that way. If I say, look, how do you claim $120,000 in tax-free income? And I can justify it because I'm giving an example in a situation where maybe that rent is reasonable. But the problem with that is that majority of the people would not fall into that category. So even if I title that video, maybe I'll get a lot of views, but that's not fair because majority of you guys don't have a big mansion in Beverly Hills, and that writing off $120,000 is not a reasonable thing to do. So I'm not going to title the video that way. But somebody else who doesn't care, who just needs to get some views because that's what they're looking for. They're looking for attention. They want to make their money from people watching YouTube videos. That person will title the video that way. They are always trying to hit either a fearful side of you or the greedy side of you. So you have to be careful with those kind of people because they don't have your best interest in mind. So please always be careful. If you're in doubt, talk to your attorney, talk to your tax professional, and get a good advice. It's very, very important. So talking about good advice, a few options for you guys to stay in touch with us. Number one, you can follow me on WhatsApp. That way you can always reach out to me and you get all the updates from me. So that's one thing you can do. I'll leave a link below the video for you to follow me on WhatsApp. Number two, no matter where you are in the US, if you need some help with taxation, definitely reach out to us. If you're a small business owner or individual, no problem. If you're outside the country and you need to do some tax filing in the US, definitely reach out to us. No problem there. We also do financial outlook calls every 2 weeks. And in those outlook calls, we look at all the financial data, but not all, maybe all the data that is grabbing my attention. And that's a lot, believe me. So what I do is I collect the data on a daily basis, and then every 2 weeks I share it with anybody who's willing to listen. So if you want to join the call, you're welcome to join. Look at the data. That way you're making your financial decisions after knowing what market is telling you. Now all this information is public. I'm not making this stuff up, so you can easily go find it yourself as well, but that's going to take you some time. You have to do some research. You have to find all that data. I just make it easy for you, present you in that one call. You have everything, and then we discuss all that data together. So that's one call. Similarly, I do a real estate call, which is really all about data, how to be a more informed person rather than somebody who's just making decisions on our emotions or because we watch some video that is making us fearful or greedy. That's my goal. Try to help you save, grow, and protect your money in a legal way, in a tax efficient way, and help you avoid some of the mistakes, help you stay compliant and do the right thing. Because I think that's the way to build wealth in the United States. Do the right thing. So there you go, guys. If you want to come meet me in person, we have live event coming up in February 24th. That is going to be happening in Milpitas, California. So you can register for that on sanjeevcpa.com. By the way, this video, I'm recording it in January 2024. So that's what these events are. But you can always go to taxcodeadvisors.com and see all the events that are happening as you're watching this video, because we are always having events going on. Or you can follow me on WhatsApp, and that's where I post all the updates as well. Then we have a live event coming up in Austin, Houston, Dallas as well. So we have 4 of those live events coming up, and then we have real estate call and financial market outlook calls. So those are the calls I would like to invite you guys on. So once again, thank you so much, guys, for watching this video. If I can be of any assistance, if I can help your small business, maybe you're starting a company, maybe you're buying a property, selling a property, maybe you want to just run your information by me to see what kind of tax strategies we can plan out for you, please reach out to me. Don't be a stranger. I'm a very easy person to get hold of, and I want to be there with you as you're building your wealth. I want to be part of that journey. So don't forget me. Just reach out to me. Okay. Thank you so much for watching this video, and I'm looking forward to talking to you guys very, very soon. Thank you.